wondered why price stops? Right there. This video is for you. Because the market doesn't move randomly. It moves with memory. Most traders think Fibonacci is just lines, pretty math, a coincidence. But institutions don't trade coincidences. They trade behavior. They trade repetition. They trade human psychology. And Fibonacci is where all three meet. Stay with me, because once you see this, you'll never look at pullbacks the same again. The Fibonacci sequence turns out to be the key to understanding how nature designs and is. A part of the same ubiquitous music of the spheres that builds harmony into atoms, molecules, crystals, shells, suns, and galaxies, and makes the universe sing. Guy Murchie. Most people are introduced to Fibonacci as a tool, something you use when you trade. But that's not what you're about to learn. What you're about to step into is a way of seeing the market that very few traders ever develop. Fibonacci isn't just a set of numbers or retracement levels. It's a language the market has been speaking long before you ever placed a trade. And once you understand how to listen, price action stops feeling chaotic and starts revealing patterns that are quietly precise, deeply human, and impossible to unsee. This isn't the version of Fibonacci you've heard in passing or skimmed through in a course. This is Fibonacci explained in a way that finally makes the market feel intentional and puts you in sync with it. I believe without hesitation that to truly understand what something is, you must first understand where it comes from. Because origin reveals intention, and intention explains behavior. Fibonacci didn't emerge from a trading platform or a textbook filled with formulas. It was born in a world where numbers were felt, not forced. Before Fibonacci ever became a tool, it was a way of watching life unfold with patience and curiosity. It began with a boy who didn't rush to answers, but lingered long enough to notice patterns others overlooked. Imagine a young boy walking the sun-warmed streets of Egypt, surrounded by marketplaces, humming with trade, voices layered in different languages, and structures built with precision that seemed almost reverent. This was the world of Leonardo of Pisa, not seated at a desk, but standing in the middle of living mathematics. He watched merchants measure goods, architects calculate balance, and farmers anticipate seasons. Numbers weren't abstract symbols. They were tools for survival, harmony, and order. And slowly, almost quietly, the boy began to sense that beneath all this motion, something steady was holding it together. Then came the rabbits. Not as numbers on a page, but as a quiet experiment in patience. Imagine a small enclosed space. Nothing dramatic, no predators, no scarcity. Just life, allowed to do what life does when it isn't rushed or interfered with. One pair of rabbits is placed inside. At first, nothing seems to happen. There is no explosion of growth, no sudden abundance, just stillness. And this is where most people lose interest, because real patterns don't announce themselves. They wait. After a cycle, that first pair produces another. Now there are two pairs, still Unimpressive. Still easy to dismiss, but something important is happening beneath the surface. The original pair doesn't disappear, it remains. It contributes. When the next cycle arrives, the first pair reproduces again, and the second pair produces its offspring. Now there are three pairs, not double, not random, just one more than before, built directly on what already existed. And then the rhythm reveals itself. Each cycle doesn't start from zero, it starts from memory. This third cycle doesn't forget the second. The fourth doesn't ignore the first. Every new generation includes the entire history of the system before it. 3 becomes 5, 5 becomes 8, 8 becomes 13. Growth doesn't jump ahead, it accumulates, it layers, it compounds like breath stacking upon breath, or confidence building upon repeated survival. Each phrase quietly carries the weight of everything that came before it. What makes this extraordinary isn't the speed of growth, it's the discipline of it. No generation rushes to become something it isn't ready to be. No cycle demands more than the environment can support. The rabbits don't overextend, they don't panic, they don't try to skip to abundance. They expand only as far as structure allows, guided by an invisible order that ensures balance even as growth accelerates. This is the moment Fibonacci understood something profound. True expansion is never chaotic. It is regulated by remembrance. Growth honors its past. It checks in before moving forward. And when left undisturbed, systems don't grow wildly. They grow wisely. What looked like a simple question about rabbits became a revelation about how life, nature, and eventually markets unfold. Not through randomness, but through rhythm. What Fibonacci realized in that moment wasn't about rabbits at all. It was about how growth behaves when it isn't interfered with. Life doesn't explode forward, it unfolds. It stretches, pauses, recalibrates, and continues. Each phase carries the weight and wisdom of the previous one. This same pattern appeared in petals opening, branches dividing, shells spiraling outward, and populations expanding. Everywhere he looked, nature was whispering the same truth. Growth follows structure, and structure follows memory. And this is where the story reaches across centuries and meets the market. Because price moves the same way life does. It expands, pulls back, hesitates, and then decides. Traders call it volatility, but Fibonacci would call it breathing. The market inhales with momentum and exhales with retracement. It doesn't move forward without revisiting where it's been. Fibonacci levels don't predict the future. They mark moments of reflection where price remembers itself before choosing its next direction. That's why Fibonacci works in trading, not because charts obey numbers, but because people obey patterns. Fear compounds, confidence compounds, behavior repeats. And when millions of human decisions collide in a marketplace, they leave behind the same footprints Fibonacci noticed centuries ago. Once you see Fibonacci not as a tool, but as a story of how life grows when left to its natural rhythm, the market stops feeling chaotic. It starts feeling familiar, intentional, almost honest. And once that happens, you're no longer guessing, you're listening. And it doesn't stop there. Fibonacci isn't just a sequence of numbers. It's a pattern that shows up wherever life grows naturally. From the way leaves arrange themselves on a stem to how hurricanes spiral and galaxies expand. The same ratios quietly repeat. This tells us something profound. Fibonacci isn't human-made math, it's discovered math. Humans didn't invent it, they noticed it. And once you see it in nature, you can't unsee it.
Pause. No, seriously, pause for 1 second. If you're watching this right now, it probably means one of two things. You're either trying to make sense of the market, or the market just humbled you a little today. Well, first, thank you for being here and watching this channel. That means more than you probably realize. Because trading can feel incredibly lonely. 1 minute you're confident, the next minute price reverses, and you're staring at the screen thinking, what just happened? You study the charts, you watch the videos, you try to follow the rules, but somehow the market still finds a way to hit your stop, shake your confidence, and make you question whether you even belong here. And let me tell you something very clearly. You are not crazy, and you are not the only one experiencing this. Most traders aren't failing because they're lazy. They're failing because they're navigating chaos without structure. They're guessing, they're chasing, they're reacting to price instead of preparing for it. That frustration you feel when price moves exactly where you expected after you close your trade. Yeah, we've all been there. That's exactly why I built this community, a place where traders can stop guessing and start trading with clarity, structure, and confidence. Inside our free community, I share the exact SPY levels I'm watching for the next trading day, the same level institutions are paying attention to. Support, resistance, key areas where decisions actually happen. No fluff, no noise. Just structure that helps you approach the market with freedom and clarity instead of fear and confusion. So if you're serious about becoming a better trader, join our free community using the link in the description. Grab tomorrow's SPY levels, introduce yourself, and let me personally welcome you inside. You don't have to figure this out alone anymore. And if this video helped you even a little, like the video, subscribe to the channel, and I'll see you in the community.
The proportions of the human body, the structure of DNA, and even the way our heart beats under stress follows rhythmic expansions and contractions. Fibonacci appears wherever balance is required between growth and stability. That's why it feels familiar when you see it. It mirrors how we grow, recover, and adapt. And that's when it starts to sound less like coincidence. Fibonacci numbers are directly connected to the golden ratio, a proportion that artists, architects, and engineers have used for centuries to create beauty and structural integrity. The same ratio that makes buildings feel pleasing to the eye. Also, it helps explain why certain price levels in the market feel right when they're tested. So here's where psychology quietly enters the room. Markets are driven by people, and people are driven by fear, hope, memory, and repetition. Fibonacci works in trading because it maps where collective human behavior tends to pause, hesitate, or recommit. These levels don't predict emotions, they reveal where emotions tend to repeat. And it gets even more interesting. Fibonacci retracements aren't about predicting the future. They're about identifying probable reactions. Price doesn't reverse at these levels because of the numbers themselves, but because traders across the world are responding to the same psychological zones at the same time, often without even realizing it. And this is why institutions pay attention. Large players don't chase price, they wait. Fibonacci levels give structure to patience. They mark areas where risk can be defined, emotions can settle, and decisions can be made with intention instead of impulse. What looks like magic to beginners is simply discipline with a framework. And finally, this is the part most people miss. Fibonacci doesn't work because it's perfect. It works because humans aren't. It accounts for hesitation, pullbacks, overextensions, and second chances. It leaves room for error, correction, and continuation. And that's exactly why it shows up so reliably in both life and the markets. So how does all of this translate to the markets? In the same way, rabbits grow by building on what already exists. Price moves by expanding and contracting around prior behavior. Markets don't start fresh each day. They carry memory. That's why the Fibonacci sequence 1, 1, 2, 3, 5, 8, 13, etc. matters. Each number is the sum of the two before it. Just like each price move is built on the momentum and emotion of previous ones. When a market rallies, it doesn't erase the past, it references it. As price expands, it eventually needs to pause and rebalance. That's where the golden ratio, approximately 0.618, enters the picture. This ratio emerges naturally when you divide numbers in the Fibonacci sequence, and in the markets, it often marks a zone where price breathes. A pullback to 61.8% isn't random. It represents a healthy retracement where fear cools down, but conviction remains. Other common levels, like 38.2% and 50%, reflect shallower pauses, moments where the market briefly checks itself before continuing. What's powerful is that these levels don't force price to do anything. They simply highlight where human behavior tends to react. Traders who miss the initial move look for re-entry. Traders already in the trade decide whether to hold or exit. That collective hesitation creates visible structure. When many people respond to the same ratios, often unknowingly, price appears to respect Fibonacci levels, when in reality, it's responding to shared psychology. This is why Fibonacci works best when you stop seeing it as a prediction and start seeing it as probability. The numbers don't guarantee outcomes, they frame decision making. Just as nature grows according to proportion rather than impulse, markets move according to balance rather than chaos. Fibonacci and the golden ratio simply give us a way to recognize that balance. So instead of chasing price emotionally, we can wait, observe, and act with intention. If you'd like to see how all of this actually plays out on a real chart, how the Fibonacci sequence, the golden ratio, and these retracement levels show up in live practice movement, I've created an entire video walkthrough through it step by step. You'll see exactly how price expands, pauses, and retraces in proportion, not theory, using clear visual examples that make everything we've talked about click in real time. Look for this thumbnail and you'll find the direct link waiting for you in the description. It's designed to take this from something you understand intellectually to something you can recognize instantly when you open a chart. You don't need to be confused by Fibonacci anymore, and that alone should be freeing. Confusion doesn't mean you're incapable. It usually means the explanation you were given didn't respect how you actually learned. Fibonacci was never meant to feel like a secret code reserved for advanced traders. At its core, it's a way to bring order to movement, clarity to pullbacks, and calm to moments when price feels unpredictable. Once you understand that Fibonacci is about proportion and behavior, not guessing, you can stop second guessing yourself and start reading the market with confidence instead of fear. You also don't need to memorize formulas or overload your chart with indicators to use Fibonacci effectively. What most beginners really need is direction, a simple framework that tells them where price is likely to pause, where it may continue, and where risk can be defined. That's why focusing on one instrument like SPY is so powerful. SPY moves with rhythm, liquidity, and structure, making it the perfect place to learn how Fibonacci works without the noise. When you remove complexity, understanding accelerates and confidence follows. And if you're ready to take this to the next level, you don't want to do it alone. Our community is designed specifically for people who are new to the stock market and want clear guidance without intimidation. We provide daily Fibonacci levels on SPY, so you're not guessing where price might react. You're preparing for it. Just as importantly, we teach the psychological tools that help you stay patient, disciplined, and emotionally grounded when the market tries to test you. Because knowing the levels is only half the work. Having the mindset to respect them is what makes the difference. This isn't about chasing trades or trying to be perfect. It's about learning to navigate the market with intention. Inside the community, you'll see Fibonacci applied in real time, explained in plain language, and reinforced through repetition until it feels natural. You'll gain structure, consistency, and a sense of calm that most new traders are missing. If you're looking for a place where you can learn, grow, and build confidence step by step, I invite you to join us. The market doesn't have to feel overwhelming, and you don't have to figure it out by yourself. Before you go, take a moment to lock this in. If this helped bring clarity where there used to be confusion, let the algorithm know by liking the video. It helps this message reach other traders who need simplicity, not noise. Drop a comment and tell me what finally clicked for you today, because understanding grows faster when it's spoken out loud. And if you want steady guidance, calm explanations, and real-world examples like this showing up in your feed, subscribe. So each time the market moves, you're learning how to move with it, not chase it. You've got this. Peace and blessings, Dr. O.